This update is going to be on the general markets and on the Apple stock particularly. And I hope this will be both informative to the position of the general market here and also educational as far as how to gauge when growth type stocks are topping out and when to sell them, because most people that start getting into trading stocks find this very easy to buy, but when it comes time to sell, there's a lot more difficulty with that. So here's what I want to look at. First off is this is the NASDAQ composite. So Apple was the most heavily weighted component of the NASDAQ exchange, and I've pointed this out already, but the RSI is very overbought on the daily chart. We've had a major commitment of traders smart money sell signal here as of the last couple weeks. Now we've had the market chop and push to a little bit higher highs, but the RSI peak is lower. Now, just trading that alone can get you into trouble if the market continues to trend higher. The way I would look at this is look at what day the RSI peaked at, which would have been this day here, and then wait for price to actually break the lowest point after that peak that created that divergence. So we wouldn't want to necessarily sell short or exit until that low is broken. Now, assuming the market continues higher, and let's say the RSI made a higher high, then that would negate the whole setup. But that's the way to look at this right now. Now, yesterday the NASDAQ had a bearish engulfing pattern, and it was on somewhat increased volume, and that's a signal that the market may be running into selling here, which is not surprising. However, then today we saw this big rebound and actually took it to a higher high. So no reversal yet, but the setup is still in play here based off of that setup. Now, here's what I wanted to get to, because this is really important here. I'm going to click over to a chart of Apple. Why Apple? Well, Apple, everybody knows Apple, right? It's the biggest stock in the world. It's the most heavily weighted component of the exchanges there. So Apple is a market leading stock, and it's going to be one that, as long as it holds up, we're probably going to see the market hold up relatively well. But when it tops, the market is going to fall. That's the way it is when you have these big name leading stocks. They carry the market. When they top out, the general markets are going to top out. The general markets may top out prior to the leading stocks actually topping out. So here's what we had: is we had Apple make a very wide range day yesterday, and I'll zoom in so you can see that's a very wide range bar. The market gapped up, ran up, sold off, had a low close. So there's a big bearish engulfing pattern there on very high volume. I don't have the volume in there, but you know, if you look at the volume on that, it's the highest it's been in over a year. And whenever you see a volume spike like that on a reversal, that's a very significant day. So just think about what happened there. Is you have this uptrending stock, and you had a tremendous amount of shares traded there. And in candlestick terms, they talk about the battle being won at the close. You had this battle throughout the day that pushed the price way up relative to the recent range or average true range of the stock. And then by the end of the day, the bears had hammered it way back down, closed it right at the bottom, and there was a huge volume spike. So that's a very significant day in the markets. All right, now, does that mean Apple is going to top right there? I don't know that. However, that is a very nice looking candlestick pattern for a topping process. But here's where this gets significant. That red line you're seeing there, that's the trend line from not the bottom trend line, but the top trend line, basically from this bull market. And I'll click over to a weekly chart so you can see. So there's a high made there, a high made there, and now it's come up and touched that high. Anybody who's familiar with Investors Business Daily, as far as that publication, or the writings of William O'Neill, which is the founder of Investors Business Daily, books like How to Make Money in Stocks, The Successful Investor, How to Make Money Selling Stocks Short. This is one of the main things he talks about in when to sell a growth stock. So let's say we're holding Apple, and we've bought Apple when it's broken out of a basing pattern like is recommended. question is when to sell it, and there's a couple rules he goes over in there. He goes over initial selling rules as far as selling when it's up 20% out of a breakout point, taking partial profits, and then he goes over some rules on looking at the PE ratio expansion, which I'm not going to get into here. So if the PE was 50 when it broke out of the base, and if it doubles up to 100, that's generally the rule he talks about there in selling. But as far as charting, what he talks about is if you have a upper trend line, so the trends of highs on a weekly chart, and he says if you have 2 or 3 weekly highs during a bull market, and the market then makes a run up and breaks that trend line or touches that trend line, he says that's a selling point. And my experience has proven that to be true, not just in general stocks, but in market averages as well. We recently saw a very similar thing happen in gold that I pointed out in August of 2011, where the market touched a multi-point upper channel line, and that's right where it topped out in that range. So what does this mean? This means that Apple could very well be topping at this upper trend line. One of the other things William O'Neill talks about in the Investor's Business Daily is when a market makes its biggest point gain right at a high, talking about a climax top. And if you look at all these weekly bars through here, this is the biggest point gain here on last week's gain, I believe. This one might be bigger, but in any case, what we're seeing is a relatively straight up move for the last couple months. It's spiking an upper channel line. The market has put in a major one-day candlestick reversal pattern. Let's say the market closes a whisker lower tomorrow. This could be a doji type of weekly candlestick pattern, which at the resistance line could be very significant. So I would be looking, if I were holding Apple stock, I would use this as a selling point. Doesn't mean it's going to be the absolute top, no. However, I think it'll probably be close. And we have a lot of data on the general markets to support the fact that the market is topping here. So, if you're holding an Apple, and I think it's just a pretty clear sell point. Use the last bull market move from 2006 to 2000, basically early 8 or late 07 as an example. Saw the same type of thing. We saw the market put in a high there, another high there, and if you run that trend line up, there's where it broke the trend line. It sold off hard for a week or two and then made another higher high, and that would have had a nice divergence on oscillators there. That's really what I like to see in tops. Maybe we'll see that here. Maybe we'll see the market sell off, push to a little bit higher high, set up a really nice divergence. But in any case, we should be close to the peaking of Apple. Now, last bull market, so late 2000, Apple topped basically when the NASDAQ topped here in early November 2007, and then the market sold off hard into mid-November, and then the general markets and the NASDAQ rallied into a lower top, but Apple put in a higher top there. So we may see market leading stocks be able to withstand the initial sell-off and make a higher high. However, if the general averages don't confirm that, that's another red flag or very obvious warning signal that we may be close to a top. So we could be looking for that here. But in any case, I think this chart is very telling on Apple. I think it's topping. This is the weekly RSI here. The weekly RSI is overbought. So we're likely seeing Apple put in a top in place here. One other thing I wanted to point out is one of the time factors at play here from this October 4th low to that high and down to this low. So that total time as of tomorrow, the rally up from this November low will be 1.618 times the time of this up and down move put together. So we may be running into a time resistance pattern as far as that goes as well. This is the Russell 2000, which is the one I've been stocking, hoping to get a short trade on. And one thing to notice here is the further we go prior to the market topping, the tighter this wedge pattern is getting. So the less it's going to take to actually break down and break that wedge. So it's viable to wait actually for that break of the wedge there with a stop up high above the highs when that happens. So that's probably a safe entry right there. The setup that's going to be at play now is look for possibly a little break to new highs here with almost immediate reversal to the downside. So that stochastics maybe will cross up into a bullish configuration or buy signal and then quickly cross down, and you have this nice bearish divergence between price making a higher high and the indicator making a sharply lower high. You could look for the same thing on an RSI. You could look for the same thing on a shorter time frame MACD chart. But that's the setup here, and I think the next few days we could see a top in here. If you want to be patient, you can wait for these trend lines to break before initiating the shorting position. But what I'm going to be looking to do is basically, if the market makes a new high and then reverses, depending on what that looks like, either take an immediate sell signal, stochastics trailing one bar low sell signal, or potentially wait for the market to come down and break this low. So whatever support happens here, so spike up and a break of support and short it there with a stop up there. So that's the setup at play here, and that's all I wanted to go over on this update for tonight. Have a wonderful night.